Hi everyone. I want to talk to you about identifying when a stock is in a base, and knowing when your stock is in a base is just going to be dependent on the support and resistance lines that you have already drawn on your charts. So here in front of you is Apple on the daily chart time frame, and what I have I've changed a few of my aqua lines to these black lines to show you where Apple had this great run, and then around 195 here at the end of July, it started to break down, and anything below this line here, or this area of consolidation, Apple is now in a base. So how you can use this information to trade or to protect your profits is by understanding that once it started this breakdown and even the moving averages started changing their directions within the base, then you want to be more mindful of that this here may not be happening where it's just like breaking through all the previous support and resistance. So, and that's kind of what our market's been doing right now. So once you identify the top of the base and the bottom of the base, how this helps you trade is, let's say we've got these two lines going, and your setup is met here. Now, me in the past, I used to want to wait for, I got a lot of things out of context, and I still do. But this is one thing that I've been able to really help myself understand. I used to trade here at the top, and I would get into a call. And I did that because I was like, okay, I've identified a trend, it's going up, and somewhere around here, I was like, it's pulling back, it's in a contraction pattern, and it's just going to explode up because it's already been going up. But what I failed to understand is that Apple, or the stock, already had its run. And I'm not saying it can't have this period of consolidation and then continue up. It can always do that. But what I am saying is when you go in and you buy a stock or a call option, you don't want to buy here at a previous point of rejection, especially when the stock has been choppy. So what you're looking for is the bottom of the movement, and this here, this place of support, once my setup is met here. So I've got the 200 that is rising, I've got my EMAs crossing, I have my 50, it started to flatten versus it was coming down here, but here I would consider it a little bit more flat. So here my setup would be met, and then I would get in. Now, how I would use this information to get out, or how I use this information to get out of a trade now, is understanding I am still in a base until the stock tells me otherwise. But I am not sticking around with my entire position in the stock to see if it's going to break out of the top of this. So let's say I'm in here because it met my criteria, and it is not at the top here. It is at the bottom and at a place of previous support or resistance. So I get in, I'm feeling confident, and I let it ride. Now I see this area of resistance, and I will do two things. I will either sell my entire position and just, it is what it is, I got that profit, I'm happy, or I would sell 3/4 of my position, a majority of it, and leave one to see if it breaks through this first line, and then if it would break through this second line, which is a pretty significant point of rejection. So whether it works out for me with that last little bit. A lot of day traders, I think, or all day traders, they're called runners. With that last little bit, I can see it run. Or I just eliminate everything here, because not only did it hit or get close to a previous line of support or resistance, but it's coming pretty near to the second one. So we've got here 189. For it to get to 196 or near it, I never wait till it gets exactly to it. Even if I did stay, I'd probably have stayed through here in that pop, and then I'd be out, because at that point, usually I'm running out of time. So, sorry, just went on a tangent. But what I wanted to share with you is, when you identify that a stock is in a base, make sure that your setup that you're doing is not near the top of the base or the bottom of the base. Otherwise, you're trading hoping that it's going to break the support or resistance, versus right here it's left the bottom of the base and I'm in here, so I'm more confident that it's going to go up. But then when I start to near this line and this line, I start to get weary. In a market like what we've had lately, definitely am weary and I'm out pretty quickly, versus if the stock is trending and I either bought more time on my option, or I just bought stock, so I don't have time decay to worry about. So I hope I explained that well or okay. First time saying it out loud, so it's a little bit tough, but don't be too hard on me, but ask me questions. The more I teach, the better I can articulate and help you. So have a good rest of your day, and see you later.